The stock of the day is brought to you by IG, Australia's #1 CFD provider. With over 17,000 markets and extended trading hours, turn US earnings season volatility into opportunity. Get started at IG.com.
And the stock of the day, Jumbo Interactive, which reaffirmed guidance for FY25 with an 8% decline in revenue for the first 4 months to the end of October. The company says it is used to the ups and downs of the lottery cycle and had anticipated lower revenues for this full year. So the company also holding its AGM today. And shares getting a bit battered and bruised off the back of that update, down by close to 5%. So let's get to my guests, Daniel Ortisi from the Stock Doctor and Luke Winchester from Merewether Capital. Luke, I'll start with you on Jumbo Interactive.
It's an interesting one, Nadine. It's one I hadn't looked at in quite a while. Obviously, stock of the day. The update today, not unexpected, as you said. This is a company where short-term period to period, it's very much driven by that lottery cycle. That's a good way to put it. But realistically, it's the jackpot cycle. We see this phenomenon where the big jackpots, when they get up to that 80, 100 million plus, many more people are likely to go out and buy that lottery ticket, and it just causes that spike in revenue for Jumbo as a reseller. So when those jackpots don't come through, it is a bit subdued. They've been in this business a long time. You've seen even investors are well aware of the cycle it goes through. But I found the longer term chart more interesting. If we've got the 5-year chart, I mean, Jumbo has sort of gone nowhere now for quite a while. It's trading, except for that COVID period, obviously at the start there, it's trading back sort of at multi-year lows. And when I saw that chart, the chart always tells a story, but you need to dig deeper. And when I actually went and looked at the business, and as I said, I hadn't looked for a while, I was really surprised at how well this business has performed relative to that share price chart. And it's probably a lesson that even for a good quality business like Jumbo, you can pay too high a price. And this was trading up at 40, 45 times earnings only a couple of years ago. But where it's sitting today, back at sort of 17 times earnings when you strip out some non-cash amortization, it's starting to look pretty attractive to me. And I think it's for the right investor. It's a slow, steady business. And you see that when you look at their AGM update. Revenue's just a nice CAGR trajectory. You've seen that in earnings. It's optimized for profitability, 50% EBITDA margins. This is a business that's, optimized for leverage and the profit line. But there's no capital reinvestment behind that. I mean, it's a business with exceptionally low capex. It spits out cash. You get a high dividend yield because of that. So as I sit here today, I thought I was going to see a business a lot uglier than what I did. And I think that valuation now in the high teens is really good for the quality of business Jumbo is. The only caveat to it is there's always sort of regulatory and competition risks. The big one being they bump up against the Lottery Corporation now, spun out of Tabcorp. But Jumbo's competed with those guys for many, many years now and shown they can carve out a niche and continue to grow and just ride that general trend towards online lottery ticket sales. So I'm going to say a buy, Nadine. It's probably a bit speculative from my point of view because I haven't looked at it for a while. Mm-hmm. But I was actually really impressed by what I saw. And I think this is a chance to take advantage of a market that probably got a bit ahead of itself a couple of years ago. They've got a bit of weakness in their Canadian segment they called out. But longer term, I think this is a business that just keeps chugging along, giving you some really good compounded earnings growth, and 17 times is not too bad for that.
Good. Well, you're not alone. We have Citi with a buy rating, Morgan Stanley overweight, Macquarie outperform, Morgan's an ad. It's just Ords that is a lighten. And I thought it was interesting because they've got this daily winners scheme to move people from free users to a $15 a month sort of subscription, a premium tier, so to speak. So looking for that sort of recurring revenue stream, as all businesses, from big to small, across sectors, are looking for right now. Daniel, do you like Jumbo?
We do, but I guess we should call out that we can be a bit biased when it comes to Jumbo. It's been a favourite at Stock Doctor for some time. I think the company was first flagged at around 2013, and I remember our covering analyst Jason was probably one of the first people to actually start speaking to Mike Ververka. So we always do tend to have a bit of a biased view, those rose-colored glasses, I have to admit. But similar to what Luke called out, I mean, the market can get ahead of itself when jackpots are trending above or going above trend, and that has a massive impact on the financial leverage of this business and the growth of its revenues. And we've seen it get ahead of itself, particularly during that COVID period in 2019. But it can reverse as well, exactly like what Luke said. So, look, we think for a business that's compounded revenue at circa 20% per annum over the last 5 years, it is a bit underrated, but that's due to the agreements that it has as the reseller with the Lottery Corp. And when they last recut their agreement, they did take a worse deal, let's just call it what it is, and had to pay them a larger service fee and took a lower revenue from it as well. So they do have that issue of bargaining power for suppliers, because they do go direct and have that relationship with the Lottery Corp for all states outside of WA. That does penalise the stock a little bit, but at 17 times earnings and 6% fully gross up yield, we still do think that it is representing an opportunity at these prices, and the jackpots will turn. And like you said, Nadine, the company does a lot of things which probably don't go noticed, which tries to encourage players in its platforms. It's always regularly doing offers, and like you said, some new subscriptions as well for people. So I think it is a little bit underrated from that view, and we'd actually call it a buy as well.
We are starting this Friday with a double buy for Jumbo Interactive. Stock of the day.
The stock of the day was brought to you by IG. Turn volatility into opportunity this US earnings season with extended trading hours on over 110 key US shares. Get started at IG.com.